So as you've probably seen from the title of this video, I'm quitting day trading, and I'm actually quitting to start swing trading. So you might have thought, okay, he's quitting trading. I'm not sure what I've actually titled this video yet, but that'll be something like that in the title. I'm quitting day trading, or I'm switching to swing trading, something like that. So you might have got clickbaited, but is it really clickbait? I don't think so. And in today's video, I'm going to go over exactly why I'm doing this and the process I'm actually going to use to make that full switch. I could do some testing and realize that it's actually not as profitable, it's actually not worth my while to do so. I guess this video would be completely pointless, but it will give you a good idea on how I'm actually going to do it, how I'm actually going to take the steps to go from an intraday trading strategy to then moving on to swing trading. Trade management style, risk management style, it can be very, very different. Technical wise, it's going to be very similar for me. So that aspect of it is pretty much done already, but I obviously need to test different pairs, the timeframes, the risk to reward, the trade management, everything like that. And in today's video, I'm going to go over exactly how I'm going to plan on doing that in the next couple of months. And hopefully it all works out perfectly. I will keep you guys updated, of course. You're probably going to comment, why is he changing a strategy? It's already working. Trading is something I use to actually make money to then put into other businesses and other investments. It's not something that I want to be doing for the next 30 years. I'm a business person. I'm a businessman. That's something I'm actually interested in. I've put in a lot of time into trading and I enjoy it to a certain extent, but I don't want to be sat in front of the charts every single day for the next 20, 30 years. That's just not something I'm interested in. Kind of gives me more freedom in my day-to-day life. It gives me more time that I don't actually have to spend sat on the charts, and it just makes it more enjoyable. I have more time to spend on my other businesses. I have more time to spend focusing on looking for the highest quality setup possible, which then makes it hopefully more profitable in the long term. And what I'm going to be doing is testing it like I would a new strategy. So I'm going through the complete testing that I would teach people in my mentorship group, or that I would suggest people to do, people that I know if they are looking to create a strategy, learn a strategy, or even start something completely from scratch. I'm not going to cut any corners with this. I'm going to test it thoroughly to make sure it's worth putting my real money and large amounts of capital behind these trades. And I'm not going to suddenly just abandon my current style of trading. I'll still be day trading. I still enjoy it. It's very profitable for me. So I'm going to continue doing that until it gets to the point where maybe swing trading is making the same, if not more, and it's allowing me to live that kind of better lifestyle that I'm actually hoping will be a result of this. So to start, I'm going to go over the reasons why I'm actually switching. And they're going to be reasons that you probably thought of before I actually went into this. And there's probably going to be a few things that you didn't actually expect. As you guys know, I am a prop firm trader. So I love trading with prop firms. I love the opportunity that they actually give to traders. I feel like it doesn't fit the style of intraday trading. There are going to be pros and cons with each trading style, with each prop firm. When it comes to different trading styles, some might be more tailored towards day traders or scalpers, and others may be tailored more towards maybe longer term day traders or even swing traders. And this is something you have to consider before you buy a prop firm, before you actually develop a strategy, if you are looking to take it into prop firm trading. Because there's no point developing a strategy that you can't pass prop firms on if that was your main goal, to actually pass prop firms and get consistent payouts from them. Is completely pointless. And one of the main issues I've actually faced with trading with prop firms, especially on funded accounts, is slippage. Slippage can be a very, very big problem, especially when you trade like how I do at the moment, with fairly tight stop losses, which obviously results in large lot sizes. And then, for example, I trade with 10 pip stop losses. So if I get slipped 4 pips, or let's say 5 pips, for example, I'm losing an extra 0.5% of my account on that slippage. And this might seem like, oh, he's not going to get slipped 5 pips. It's happened and it's painful. Recently I was in a trade and I was risking 2.5% of my capital, and the trade lost 5.5%. That's brutal. Imagine just risking 2.5% and losing 5.5%. It's very, very stupid. And to put it into perspective for people, it's like risking $2,500 and losing $5,500. When you place a stop loss on a trade, you're accepting the fact that maybe you get a couple of pips slippage. To get slippage of that scale, I think that is quite ridiculous, especially if when you go on the charts, you realize that price never actually came to that point, only on the broker I was actually using with that prop firm. And it is very, very annoying when this actually happens. And the way that this will be fixed is with swing trading, you're obviously using a lot larger stop loss sizes. So to put it into perspective, well, the difference in stop loss sizes, currently using 10 pip stop loss. And from my testing so far with swing trading, I'm using anywhere between 30 to 50 pip stop loss sizes. 5 pip slippage on a 50 pip stop loss size is only 0.1%. So the same amount of pip slippage will only be 0.1%. And again, it's not as brutal because obviously the stop losses are larger. The lot sizes as a result are smaller. So it means each pip value is going to be a lot less, 5 times less than the original, well, the current strategy I'm actually trading. So that will hopefully help with slippage, especially with prop firm accounts. I don't usually suffer from slippage badly on my personal trading accounts. I feel like the broker I'm actually using, it's FCA regulated. They're not going to have, bad trading conditions like they can with prop firms because they're not regulated. They can control the slippage. They can increase slippage if they know you're close to passing or if they know you're close to your daily losses, for example. They have the control and the power, basically simulate the market conditions for your trading account however they feel is necessary. And this is why people will get extra slippage near their daily loss or during their account when they're near the profit target. You see a lot of people, they near the profit target and they'll finish, $10, $5 below. This could be the reason. So moving on to the second reason is that it's easier to identify setups. In my opinion, the higher the time frame, the easier the setup is to see and the higher quality that setup is going to be when it actually appears. If you go on the charts right now, you look at your normal strategy, then you look on the 4-hour time frame. It's much clearer when that setup is actually there. Therefore, meaning you're going to have less times when you're looking at the charts confused whether the setup is there. Obviously, you shouldn't have this anyway, but it just makes it more clear cut whether there's going to be a trade or not. And I found this to be very, very true. It also means, because obviously you're using the higher time frames, you don't have to be on the charts for that split second the price is tagged into your entry. Trading on a 15-minute time frame, or let's say the 5-minute or lower, dependent on what you're actually trading, there's going to be times where you're going to miss a trade by 30 seconds, a minute. On the high time frames, this is less likely to happen. Price maybe takes hours, if not days, to come into your entry. And then you have limits or alerts at these areas, then you set limits, and then they're sorted. Whereas on the low time frames, you can quite easily miss a setup because you've had a knock at the door, or you've had a call, or your dog's chewing your desk. All these different scenarios that could take place that could stop you entering the trade, and that trade could maybe get you out of drawdown, get you out of a losing streak, pass your prop firm challenge. These are all things that could be disrupted by missing setups. So making setups easier to identify and making them easier to actually get into the trades, this was quite high up on the list of reasons why I was actually looking to switch to swing trading in the first place. And as a result of this, from my current testing so far, the higher time frames have actually performed better strike rate wise in comparison to my 15-minute time frame strategy. It's the same trading style, the only difference is the time frame and the pairs. Obviously, I'm not just trading GU with this, I'm trading multiple different pairs, but we will go into that later in the video. And as a result, my win rate has increased. It's not by a massive amount, not by like 30-40%, but it's definitely gone up so far. Obviously, there's not enough data of live trading yet to fully compare it, but this is the results are actually going on so far. And one of the main reasons that I actually slightly touched on at the start of this video is more time freedom. I was actually speaking to Matt Gray and Ara, you guys probably know them on YouTube, quite big in the Forex industry, and they are swing traders. And the stories that they tell and the lifestyle that they can actually live now because of this swing trading, they're out playing golf, they're out doing whatever, it's a lot easier to actually live a trader lifestyle from swing trading. Day trading, intraday trading, scalping, all these sorts of trading styles make it a lot harder to actually live your life. So you end up being behind the charts for quite a lot of the day, whether it's refining your edge, entering trades, marking up trades, journaling trades, backtesting. But on the higher time frame, I feel like this becomes a lot easier. I'm not going to go into the details now, but later in the video you'll see, so make sure to stay to the end, why it is actually easier and how I'm actually going about trading with the high time frames. But the main reason is more time to do whatever I want. It will allow me to have more time to help the members in my Discord community people that are buying my course, all these people I'm looking to help to trade, I can answer more questions because I'll have more time, because I won't be sat in front of the charts for hours every single day. So let's move on to the bit that you're probably more excited for, how I'm actually going to switch. And it's not going to be something where, okay, I've had 3 months of profitable backtesting data, let me just start switching. Nope, it's definitely not going to be like that. We need more data on a strategy to actually fully understand whether it's going to be profitable or not. We can't just say, oh, well, I've had 1 quarter of profitable trading or 6 months of profitable backtesting data, is perfectly ready. The reason I'm actually going into more depth during this switch in comparison to a normal strategy is because it requires a completely different management style. A lot of traders say you need to be patient, but for swing trading, you have to be patient. Like, the patience level is something completely different to what I'm actually used to normally. But I feel like the main factor that's actually helped me with this is because I was already trading with minimal setups. So I was already waiting for high quality setups, and these might have presented themselves 3, 4, 5 times per month. And this was on one pair as well. So I'm used to kind of waiting a lot of time for setups, and whether that be a loss, you've waited 2 weeks for a loss, your patience levels are definitely tested, because then you want to obviously make back that loss and you don't want to revenge trade. So I feel like I have built up quite a lot of patience from that. But actually being in trades for 2 days, 3 days, 4 days, that's definitely going to test my patience very, very strongly. And it's something that I'm excited for. If you're getting comfortable, that can be a sign that things are going to go downhill. Obviously in trading, if you've got a good strategy, why change it? But the reason why is, I've made quite a lot of money from trading. I'm looking to invest it elsewhere, build other businesses. That's the main reason. Just touching on the fact that the trade management is going to be different. The main thing I'm actually going to be doing to test this is by live trading. So a lot of people will be thinking, oh, why are you risking your own money when it's not fully developed yet? But the main reason behind this is I want to get used to actually trading live markets. I feel like the majority of people that actually fail in trading, they might have a really, really good strategy and they might have backtested it thoroughly and it might be profitable. The main factor behind them not being profitable is that they can't recognize the setup in live markets. If you can't sit down at the charts right now and see if there's a setup valid, or see if there's a setup present, or there's one that's going to be present in the next couple of hours, you don't know your strategy. If I can't sit down right now, open a GU chart and say whether there's going to be a setup, I don't know my strategy. The main reason why I'm also backtesting and live trading is for this exact purpose, to identify setups in real time and get entries and trade management experience with this new style. How am I actually doing this? Well, I put in a few £1,000s into a trading account. I'm going to be live trading swing setups only on this account. So we're 2 months in so far, and I'm currently sitting, if I just check, at 3.58% profit on this account. So we're 2 months, 2 profitable months so far, which is very, very good. And it's encouraging signs. I feel like this is going to help the most because obviously the backtesting is mainly to focus on, risk to reward, different pairs, which one's more profitable, different sessions for entries. That's the main reason behind that for me personally. When I'm actually switching a style like this, it's obviously going to be different when you have to develop your confluences, your entry criteria, stop loss sizes, everything like this. But I kind of have already a good picture of that because I'm trading the exact same style, that's the exact same entries and confluences, but just put onto a higher time frame. So that is the only switch I'm really making. So obviously the stop loss size, the risk to reward, the pairs are going to be different. So those are the 3 things that I'm actually mainly testing from back testing, and that you can't really test as much or as quickly from forward testing or live testing. So forward testing is obviously quite good to do, but you're not getting into the trades. Majority of traders could be really, really good. And you often see it on Twitter or social media, people say, oh, well, I said GU was going to buy. Did you trade that? Did you make money off that? Oh no, I didn't do that. But I said it was going to buy though, so I'm a good trader. Social media is plagued with traders like this that claim they can trade because they've called in the markets. It's 90% execution. Anyone can say if price is going to go up or down. It's a 50-50 at the end of the day. Actually making money, actually getting in trades, actually executing on these predictions is the difference between being profitable and not profitable. It's all good me backtesting and seeing the setups after 3 candle clicks, simply just pressing the mouse, the candles fly by. It's very, very easy. Actually trading the setups live, managing the setups. When do I close early? Are there psychological barriers with my exits or my entries? These are all things which I actually need to focus on if I'm looking to trade this new style. A lot of people actually neglect this, and maybe you watching this video will start testing this as well. Obviously, I wouldn't say put all your money into an account and live trade like this, because that is very stupid. You know, I've only put in a few £1,000s that, you know, I'm willing to risk. If the account goes to zero, which it's not going to do because of, you know, my risk management, that's not the end of the world. You know, I'm happy losing all of this money. If you're putting any money into a trading account, you have to be comfortable losing all of it. There's obviously a chance that could happen. Something could go wrong, you could lose control. Anything is possible with trading if that money is in your trading account and not your bank account. So I put money in that I'm comfortable losing, because I know that trading a new style is not going to be perfect, but so far it kind of has been perfect, which is great. And the main thing I'm actually going to learn from this is I'm going to journal every single trade, of course, and I will start noticing which times a day, which breaks of structure I actually prefer to trade, and which ones are actually more profitable and easier for me to see. There's going to be a struggle with trading multiple different pairs, because I'm only used to opening charts, opening GU, and that's all I have to do. But switching between different pairs, you know, I've kind of got into a good cycle now where on my trading view, I'll just flag the pairs that I have alerts set for. So I know which ones I've actually got alerts that have potential entries coming. But then I also have a different color for trades that I'm actually in. So trades that I either have a limit set on or that I have a position running. This makes it easy because if I go on TradingView, I can immediately click on the charts that I know I have positions running. So it's easier to check on those. And also I can save a lot of time by having to click through every single pair to see which trades I'm actually in. And it is a lot different because I could be in multiple different positions. I could be buying the pound, selling the Aussie dollar, buying the yen, you know, all these different things that I could be doing at the same time. And obviously you've got to be careful because you don't want to trade conflicting pairs, because if you're wrong, you could be wrong on both. Then you're doubling the losses, even though you could have just been wrong once, because they are obviously correlating. So it can be quite difficult in that sense. So you have to be careful and kind of pick which setups are actually the best looking and have the highest probability of winning before you start adding, you know, 4 or 5% risk at one set time, because this isn't what we want to do. We don't want to be risking 5% of our account on each trade or each day of trading, because, you know, with prop firm challenges, this is obviously a trading style that I'm tailoring towards also passing prop firm challenges and adhering to their drawdown rules. I know that's going to be a lot more difficult because I'm used to passing these prop firms relatively quickly in a day, 2 days, 3 days. So that's usually an average trade for a swing trader. So it's not going to be as quick for me to pass, but if the win rate is there, we can also increase the risk to hopefully pass a lot quicker. So I'm also going to be backtesting, but before I actually go into my backtesting, I'm just going to talk about why traders backtesting and live results actually differ quite a lot. I do feel like the main reason for this is trade management. And as I touched on previously, that's the main reason why I'm live testing. But for the majority of traders, they'll be trading on their backtesting, whether they're using FX Replay or just TradingView. You know, I personally prefer FX Replay. There's a link in the description, my affiliate link, if you want to buy it. I've always recommended it. So yeah, it's a good tool to use. But these traders will be clicking along with price action. They'll enter a trade, risk 1%, let it hit stop loss or take profit, and then that's it. The main reasons why this is wrong and why it could also harm your results and your confidence in your strategy is because that's not how you're actually trading in the markets. So I've spoken to people that they have good backtesting results, they're making high percentage, but then their live account results are completely different. Their win rate's a lot lower, their average RR is a lot lower, and they're like quite confused because they don't know why this is. They don't think that they should be that much different from the backtesting because they're taking the exact same setups. You could take the exact same setups, but if the trade management and the risk, the exits, the entries are not exactly the same, your results are obviously going to differ. There's two main points that I've actually taken from this and that I should recommend people to actually focus on. Number one is exiting positions. A lot of people in their live trading are more likely to close trades out and not let them run to stop loss or take profit because of their emotions, because of what they see happening in front of them and the fluctuations in their profit that they're seeing on their account. The main example for this is, let's say you have invalid setups. So if price doesn't break structure or it breaks in the opposite direction, people will close out of a trade. And let's say you close out for 0.1% profit. This can technically count as a win. So let's say even you're backtesting, you count this as a win. That is then affecting your win rate. So it's saying your win rate is higher than it is. You're basing it off, okay, my average risk to reward, my only risk to reward is 1 to 3. My win rate is 50%. So technically, that strategy should be profitable. However, you're not accounting for all those times where it said it's a win, but you're actually closing at 0.1% or 0.2%. So the win is 2.8% smaller than it should be. So one average win should cover 3 losses, but you actually need 5 of these 0.2% wins to cover 1 loss. So it automatically messes up your win rate and your profitability, your average risk to reward. That's one reason. Reason number 2 is news trading. And people on backtesting, they'll click forward, the news candle will go through, they just leave it, they'll add it to their results. A lot of traders, when I see them trading live, they'll either close out their positions before the news, whether it's in a loss or in profit, again counting as a loss or a win. And then maybe that news candle goes in a direction that they were actually anticipating, and it meant that they would have made profit. For their backtesting, they would have made profit on this, and it means that they're also differing their trading from their backtesting to their live trading. So the results are obviously going to be different. And if you expect anything else, then you are, a complete idiot, in my opinion. So for my backtesting, the main thing I'm actually focusing on first is pairs. I want to know which pairs work the best for this. There are going to be people that are saying, oh, if it's a strategy that works, it should work on every single pair. And I do think this is true. I feel like I could trade Bitcoin, I could trade oil, I could trade GU, gold, and it would work on all of these pairs. There are going to be certain pairs that I prefer to trade with. Certain pairs where I find more setups on and that are maybe more profitable in the long term. And this is obviously the main focus. The main reason why I don't want to trade pretty much every pair possible is because let's say 10 setups present themselves. I don't want to be risking 10% in 1 week or in 1 day of trading if they all hit stop loss. That's not something I would be comfortable doing. So I'm going to slowly narrow it down to maybe 5 to 10 different pairs that I can actually trade. And because it's swing trading, higher time frame, it's quite easy just to flick through and see whether there are setups on any of these pairs for the next couple of days. It's good because the markets can't completely change and there can't just be not a setup at 10 a.m. and suddenly a setup at 10:30 like there can be on the 15-minute time frame. Because 2 candles on a 15-minute time frame, price could break structure, retested, then that would have been my entry normally. So things can't change as quick as they could on my current strategy, which means that I can effectively analyze and chart up multiple different pairs using the same amount of time. Also, I'm looking at stop loss sizes. So I'm looking at using stop loss sizes based off of obviously structure. So above the imbalanced candles, above the breaks of structure, above the previous highs or lows. This is something that I don't currently do because I've been trading with 10 pip stop loss, 30 pip take profit, because that is the best stop loss that I've actually tested for my current strategy. Whereas it's going to be different pairs, different volatility. They're going to be different stop loss sizes. So I'm going to have to test this out and maybe make it so that I just trade off of previous highs, previous lows with the stop loss and the take profit, because then it makes it a lot more easy. So instead of having it 10 pip and then 30 pip for stop loss and take profit respectively, it's then going to be previous low for the stop loss, previous high for the take profit, and then that is the risk to reward. And then have a minimum risk to reward based off of the win rate, because if your win rate is very, very high, you can afford to have a lower risk to reward. Whereas if your win rate is very, very low, you need to have a higher risk to reward to keep the same amount of profit. And this is quite basic stuff, but a lot of people neglect it when they're actually trading. They see, okay, I have a 60% win rate, that's pretty good. But if your risk to reward is very, very low, it could also be a losing strategy. So backtesting is obviously something I'm going to utilize, but my main focus is on forward testing and live testing. Forward testing, the main reason behind this, like I said previously, I can basically see setups in real time. Setups that maybe I want to test out. So not setups that I'm going to take that are like solid setups that I can live test and enter my real money on, real risk onto, but setups that I feel like they look good, but they're not setups that I want to risk money on. And setups that maybe I want to test. Maybe I want to test a new stop loss size, but I still want to be able to see it in real time. Maybe I'm backtesting it alongside it too, but I want to just manage the trades. this is something I'm going to also do. Over the next couple of months, I will maybe do updates on my second channel, link in the description, or you can go find it, go check it out. I'm going to upload a lot of raw videos on there talking about the switch to swing trading, just raw trading videos. So go and check that out. But yeah, if you have any tips, maybe you are a swing trader, leave them in the comments down below. And yeah, hopefully this switch actually works. And hopefully the next few videos are me actually swing trading. So yeah, catch you guys in the next video.